Robinhood gearing up for a breakout, a breakdown, or a sideways trend? Today, we will break down the charts across the weekly, daily, and 4-hour timeframes, and we will also look at the option chain to see what traders are betting on. Welcome back to Fintech Spy, where we dive deep into fintech charts and market trends. If you are new here, hit that subscribe button for more technical breakdowns. Let us hop right into Hood. Before we begin, as a reminder, I am not a financial advisor, and you should do more homework than just the spy on what the chart is doing. As stated in our midweek review, we finished out the week by forming both a higher low and a higher high on the weekly chart. We are also holding above that key Fibonacci level at 124.55, which should act as an excellent support area on any retests. Looking at the Stoch RSI, we have just barely crossed back over. Even though we are still in oversold territory, the climb to the upside is beginning, and that can provide fuel for a continued push higher. Moving over to the daily view, we can see that even though it was a short trading week, it was a strong one, with lots of higher lows and higher highs. Friday, in particular, looked like a big battle between sellers and buyers, with the stock only managing to move up about 40 cents by the close. Volume came in around 13 million shares instead of the more typical 30 to 400 million, which tells us the turkey coma was still in full effect after the holiday. We are heading toward overbought territory on the Stoch RSI, so a day of pullback sometime midweek should be expected and would be healthy. Hopefully Monday can shape up to be a higher volume day to make up for the lackluster end to the week and confirm that buyers are still in control. Coming over to the 4-hour chart, we can see that the Stoch RSI is drifting back toward neutral territory after the recent move. At the same time, the MACD is just about to cross over, which often signals that a short-term shift in momentum is coming. Both of these indicators are pointing to a slight pullback on Monday as traders take some profits and reassess. Looking back at Friday, it was generally a sell-off day, with most of the meaningful buying only showing up toward the end of the session. That late-day action has carved out a minor support zone in the 128.60 to 129.00 area. If we do push higher on Monday, keep an eye on that band as a key area for price to pull back to and potentially bounce from on the next leg up. Looking at the December 5th options chain, we can see another very uneven spread that points to the bulls still trying to keep this climb going. On the put side, there is open interest building down at the 125 and 120 strikes. On the call side, the first big bulk of open interest shows up around the 130 and 131 strikes, with a second major cluster up near 140. If this really is going to turn into the Christmas rally some traders are hoping for, watch for a monster push toward that 140 zone to set up next week. A confirmed move in that direction, especially with the rate cut announcement on deck, could be the catalyst that finally propels Robinhood past its all-time highs. Robinhood traders definitely stepped in and stopped the bleeding as needed back on Monday, and now it is all about keeping that momentum going. Friday also showed that even in extremely low volume, bulls were able to keep the day green on an otherwise predominantly red tape. Looking ahead, I am watching to see if that resilience can carry us back toward those all-time high levels. For now, my outlook is optimistic. The risk is still there, but the work done so far has eased most of my fear around this chart. If you agree, disagree, or want another ticker in the spotlight, drop a comment and we will spy on it next.